Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, September 2nd, 2008. Well, I hope everyone had a nice relaxing holiday weekend out there, because when you came back into the market today, it was unbelievably volatile. And we're going to talk today about the monstrous reversal that happened in the markets today after a big gap up of more than 200 points on the Dow, 40 on the NASDAQ, as this market just rallied the first half an hour of the day, huge to the upside, and then reversed and just sold off the rest of the day. We're going to go into the chart patterns, discuss why this happened, what was behind it, and also look towards the future now. We're getting into the time frame in this market where all the traders are back at work, volume's coming back in the market, and we're going to start to see some moves possibly of a better magnitude, or at least with a little more volume and follow through to be able to tell where this market is headed. So that's what we're going to talk about today, but I want to get right into things. Let's first discuss what the Dow, NASDAQ, and S&P did today. The Dow was down about 26 to 27 points. The NASDAQ down about 18 points, and the S&P was down about 5 points on the day. Really, the NASDAQ led things percentage-wise, while the S&P and the Dow were just down fractionally on the day. Now, that doesn't even come close to telling the whole story, because what we're going to look at here in the futures chart, and again, this is the 10-minute chart of the ESU8 contract, September '08 E-mini S&P 500, what we're looking at here is the market early in the day up to the upside huge, all right? You're talking about the futures here gapping up over 100 points, initially even about 150 on the open, and then initially on the open, which was right around here, you see the markets get a huge bid and spike to the upside even more. At one point, you had the Dow up well over 200 points, right into the 10 o'clock time frame. Now, those of us that understand time frames know that 10 o'clock can sometimes be a major reversal time frame, and today was the absolute epitome of that. We saw the market start to sell from this point at 10 o'clock, and the continuation just continued all day. Look at this sell-off that happened. You basically had from 10 o'clock right to 11 o'clock constant selling until you hit the 50 moving average, at which point a bear flag, or in spirit of bear flag as we like to call it, occurred. Now, right now, as this moved up into the 20 moving average, right up here, was the exact selling opportunity you were looking for off that flag pattern, and another sell occurred right down to the 200 moving average. At which point, again, you saw a nice flag pattern develop. You stayed right underneath this 20 moving average. It never quite touched there, and then the hard selling in the afternoon session became apparent, obviously, as we sunk to new lows, took out Friday's lows, in fact, and sold even lower. So you can see here that we went right here until about 3 o'clock, at which point the market started to get a little bit of short covering to come in, and they rallied it off those lows. But a beautiful couple flag patterns for shorting in this market today, as the market really just lost steam ever from the high right at this point. All right. Now, that's only part of it, because I really want to delve into what was behind the psychology of this market today. Why did we gap up so much only to sell off in reverse? That's probably the question on many people's minds. And all I can say is that it looks to be a part of the global slowdown fears. And when I say that, we all knew the hurricane was coming in, folks, and we all knew that we went into a neutral stance, obviously, for the last few days of last week and into Tuesday today, and that worked out beautifully. To stay in a neutral stance, you couldn't have picked it better to be flat in this market with no real, major positions out there, because when the market gaps up and reverses like that, it doesn't matter which way you are, you probably got stopped out intraday. All right, a huge gap up. Anyone short probably got killed on the gap up. And if you went long into today, you obviously are not very happy with the close on the negative side after such a rally early on and a reversal. So the neutral stance was a beautiful one to go by. But let's talk a little bit about Hurricane Gustav, which we knew was coming into the Gulf over the weekend and possibly threatening that Louisiana, Texas, all those oil rigs with possible damage. Well, that storm came through. And when we're talking about damage that the market's concerned with, really the market's concerned with the oil rigs. I mean, that's what it all comes down to, the refineries, the oil rigs, and there was no real damage done whatsoever. It came in a little even weaker than probably expected as a Category 2 mostly, and did not do any damage. Now, oil, we talked about this on Friday. We said if the storm is stronger than expected, oil will gap up. If the storm is weaker than expected and no damage is done, watch for a major decline in oil. And that's exactly what we saw today. A huge drop in oil, especially pre-market, with the oil down as much as $7, $8. And all of a sudden, we knew that the market was going to gap up on a drop in oil, as we've seen in the past. But then we saw this reversal. What caused that reversal at 10 o'clock? Well, the key here, folks, is that people stood back from the storm passing and said, okay, what's changed? What's going on with this market? What's going on with oil? Why is oil really dropping? Because no damage means that really we should be, right where we were prior to the storm a week ago or whatever, which was 115, 118, whatever. But the key here, folks, is that all of a sudden you're coming into the idea of a global slowdown as being everything in this market. All right, that's why oil's been dropping, because Asia, Europe, the expectations of a major slowdown are out there, and they're coming left and right. And the signs of this happening are just becoming more and more obvious and apparent out there. And that's scaring the public. Obviously, when you have a drop in world demand, whether it's the U.S. economy going into recession or a global recession, now you're dealing with less oil being used. That puts pressure on oil. In addition, and this is the key, folks, is that when Europe and Asia go into a slowdown, obviously the initiative there is to lower interest rates. When you lower foreign interest rates, the U.S. dollar becomes better play. It becomes stronger, obviously. The dollar gains strength, and we saw the UUP, which is the dollar index, or any of the dollar indexes out there, rally up, which again puts pressure on oil because oil's traded in U.S. dollars. So those are the keys in this market today. It looks like the global slowdown fear really grasped the market and held on tight, causing a major reversal out there. Now, that doesn't mean we're speculating that we're going to see more downside or upside. Right now, until tomorrow, we have to stay in that neutral sense. I want to show a little bit of a channel in the SPY Daily, and we're going to flip to the SPY Daily now to really go into this market, okay? Because we're in a channel, there's no doubt about it. We've been in this channel for the last 2 to 3 weeks, and I'm going to draw it right in here, all right? The top end of that channel right here, and the lower end of that channel right here, all right? Now, this is the key, folks. We gapped up today to the upper end of the channel, and by the end of the day, we were towards the lower end of that channel. Now, we haven't hit the lower area of it, so there could be a little more downside here, and I want to draw that in, all right, there. So you can see that little bit right there. On the upside, you could be looking at a move, should we reverse to the back to the upside, there's actually a larger amount to the upside of that channel that could be in play. But right now, you're looking at really this area right down here to that channel as being good support, and resistance is all the way back to the high end of that channel. So let's erase those lines so we can really see it. So here's your resistance, here's your support. We basically, again, gapped up to the higher end and sold all the way down through the 20 moving average to the 50 moving average, tagged the 50, and then bounced off the 50 into the close today. All right, so on a downside angle, you're obviously going to look at this being as key support, which right on my chart I have it at approximately 126.50, give or take. All right, so that's going to be some major support in the market over the next couple days. Now, should we break this line? We won't talk about it yet, but should we break it, then we'll start analyzing the downside. Now, on the upside, obviously, this will be the resistance at approximately 130.75-ish, give or take, on the SPY. Should we break that, and it's a whole new ball game as well to the upside, as this market could really rally. In tomorrow's video, we'll release our sentiment. Right now, we're going to stick with the neutral sentiment, which has been dead on over the last few trading days, and we're going to stick with that till we get the little more indications tomorrow. We've got some calculations rolling out about which way the market looks to be headed, but we want to confirm it with tomorrow's action, at least early in the day. So in tomorrow's video, I can give you guys a little better sense of what we're looking for over the next week or two. All right, now, so right away you see the SPY. Those are the support and resistance points. That's everything. Note the volume increase as well. Very nice volume increase here today, and that's going to continue. Volume should continue to roll into this market very clearly. Now let's look at the NASDAQ, because the NASDAQ was actually pretty interesting today, as it was actually under a little more pressure. And one thing I will say about the NASDAQ is you have a much stronger chart, even though it was weaker today. Note the channel again on the NASDAQ, all right? This is another channel, just the same way. All right, you can see that the channel here, you have the downside coming right into support here on the 50, yep, that's the 50 moving average, and again, you can kind of see it right here. And the unique thing about today's angle on this chart was that we gapped up into the 200 moving average. All right, so you gapped up into major resistance. Right away, you started to sell. You came all the way down through the 20 moving average and actually came all the way down to touch the 50 moving average here. So that's the unique thing about it, is today's move actually, we touched all three moving averages, or came close to pretty much touching every moving average or main moving average that we follow. All right, so you have basic support right down here, folks. Now I'm going to draw this in. You can see it from the low here of this day. You have the 50 moving average here, and we didn't close below that line today, so this point on the chart still holds true as good support. On the upside, obviously, you have this area coming together. Now, you have the 20 moving average moving up like this, the 200 moving average moving sideways-ish, and those are going to meet and form a lot of resistance. So the key is, are we going to be able to get back above this level, or do we settle on this support and even break down here? All right, we start breaking down, well then it's a whole new ball game, as we mentioned on the SPY chart as well. All right, and we'll get a little more information on that tomorrow and give you guys a better idea. Should we take out the upside resistance points, well then we're talking about a move to possibly this level right up here on the NASDAQ. So those are the keys in this market for now, folks. Again, the USO got slammed. Look at this USO chart, though. We gapped below the 200. This is where we gapped down to, but look where we closed. We closed right on the 200. There's a big gap now in the chart here we'll have to analyze and continue to watch for and see which way oil goes in the future. Watch the dollar. Tomorrow should be very, very interesting off of today's reversal. Obviously, come join the intraday stock chat. Fantastic learning experience and trading environment. Join the Swing Trade Alerts. The new website will be up shortly. Stay tuned, folks. See you tomorrow. Take care.